So today I'll be handling tax computation, which is a key part of your skill as a tax expert. And the tax computation we are looking at today is on personal income tax computation. Personal income tax computation. Tax computation cut across the different types of taxes. We have companies income tax computation. We have VAT computation. We have withholding tax computation. I want to be sure that Madam Shola is here. Okay, she's here. Okay, she's in here. Okay, so but today we'll be looking at personal income tax computation, and we are aware of the Finance Act of 2020 and that of 2019. Now, the Finance Act of 2019 did not do much amendment when it comes to personal income tax. Some key introduction there was mainly on the requirements to have a TIN number before you open a bank account if you want to use the bank account for business. So basically, when it comes to the of 20, the Finance Act of 2020, we notice that there's a new definition of gross income. Okay, and when you are looking at your tax computation, you can do your tax computation under two categories. It could be under payee and it could be under direct assessment. Payee is basically used for those in employment. So if you are a salaried person, so it means that you will come under payee. And direct assessment is mainly for those that are not in employment, as in they are self-employed, they own their own business. So they come under direct assessments. And in that case, you need to calculate their profits or their income by deducting their revenue from their expenses. You know their income, then you apply the taxes on their income. So if I'm a business owner, I earn like 1,000 naira, and I make some expenses of 600 naira. The excess of 400 naira, let's assume that those expenses they are tax deductible expenses. The balance of 400 naira, the balance of 400 naira will be will be chargeable to tax. That will be my chargeable income. That's the balance of 400 naira. Okay, because I'll deduct my tax deductible expenses from my taxable income to get my chargeable income. So I apply tax on the chargeable income. That's for self-employed. So that comes under direct assessment. But for payee, as I said, is for those that are employed. So in that case, the salary, basic salary, housing, transport, and all other allowances, it's very, you just enjoy what we call statutory deduction and reliefs and some reliefs. Okay, and it's when you go through this calculation, you will see what I'm talking about. So as a tax expert, it's basically important that you're able to calculate your own payee if you are self-employed. I mean, if you're under salary, to know how your net pay is arrived at yourself, and that will be one assignment you should be able to do. Then again, you should be able to do if you are doing for self-employed people. You have some high net worth individuals, some business owner that own their own business. That's business name, enterprise. It's not limited liability company. Because limited liability company taxes goes to the federal. But looking at state taxes now, that's payee. So if a business own an enterprise, you to calculate the income, prepare the management account for them, know their income, apply the tax rates on their income after deducting uh, capital allowances and allowable expenses. So I will use this example to illustrate my point. Some people, they are self-employed and also they're also doing business. So they come under both, direct assessment in a way and under payee. So that's it will be very good if they are able to declare that they have other source of income to their HR, so that they are able to use one calculation to remit their taxes to the relevant tax authority. So looking at this question and this case study, we are going to look at the tax exposure of Chief Rotimi Eze under the Finance Act of 2020, and also look at it under the Pre-Finance Act. Definitely looking at this year of assessments in this case study, which is 2018 year of assessment, then the Finance Act of 2020 is effective from 1st of January 2021. So it does not really apply, but we are going to apply it here, and we'll also compare what is the tax position of Chief Rotimi Eze uh, before the Finance Act, what will be the tax position of Chief Rotimi Eze after the Finance Act. What's the difference? And I must tell you that the Finance Act, in terms of taxes, as in a way, is not favorable to self-employed, and it's not favorable to payee. I mean, those under payee, because from what we've seen now, they are paying more taxes, and that means the net pay will be reduced. So, looking at this case study, you will understand the impact of what I'm saying. Chief Rotumeze was employed as the personnel manager by Apex Ultimate Limited in 2010. Due to the harsh business environment, the company ceased business on June 1st, 2017. Chief Rotimi Eze was employed by ABC Trading Company Limited as the administrative manager on January 2nd, 2018. So you could see Chief Rotimi Eze is now employed by ABC Trading Company Limited as a manager. So he's employed in a way. So definitely it will come under payee, that if he does not have a side business. And don't forget that personal income tax, the basis of assessment for personal income tax is actual year basis. So I said Chief Rotimi Eze was employed by ABC Trading Company Limited as an administrative manager on 1st of January, on January 2nd, 2018. So you could see that is employed by which company? By ABC Trading Company Limited as what? An administrative manager. Or from where? From January 2nd, 2018. So you could see that 2018 is a relevant year that we are looking at now. Look at the detail of his salary. The detail of his salary per annum are as follows. His basic salary is 48 million, as someone that is very experienced. His housing allowance 5 million, transport allowance 4.8 million, utility allowance 1.2 million, meal allowance 600,000, clothing allowance 420,000, leave allowance 1 million. Now let's look at if he has any additional information. So we have additional information from Chief Rotimi Eze. So we are told that in 2016 he obtained a loan to build a property for commercial purposes, on which he received a rent of 9,600,000 per annum. So that means that apart from his normal salary, he's also doing other side business. And he started his side business in 2016, where he obtained a loan to build a property for commercial purposes, on which he received rent of 9.6 million. So this kind of income is an unearned income, because it's just the rent will just be coming in every year. Okay, and we're not told if the withholding tax was deducted from this rent. Otherwise, it should have been stated there. So this is the income from rent. Okay, so he has other income apart from his employment income. Now we have the expenses related to the property in 2017 and in 2018. General rates, we have the figure 67,500 in 2017 and 70,000 in 2018. Water rate 96,000 in 2017 and 97,000 in 2018. So we have the figure here: insurance premium paid, repairs, agent commission. So these are the expenses incurred on this property. So he's making income from this property, he's incurring some expenses on this property. So you will need to calculate his net income from the property. So this is like direct assessment for him. But because he's doing two